now, though, we are on your side with Money Talks. We're joined by Don Bruce, the director of the Boyd Center over at UT. Hey, thanks for coming in today. And we got a couple questions in terms of course, the economy and inflation, but we're specifically going to talk about retirement. But let's start with, what are you making of these market fluctuations and, what's going on with the economy right now?
Well, thanks for having me back, Lexi.
Of course.
I enjoy this. And, last week we were talking about 9% inflation, how the price of goods that we buy every day have gone up by almost 10% on a year-over-year basis. It's quite the opposite story with retirement assets. Stock markets, more specifically, are down, over the last couple of months. These are really complex and interesting economic times.
No, and definitely, and it's going to impact everyone differently. So for the average person who's maybe looking at retiring 10, 20, 30 years down the road, how should they be responding to this? Of course, we don't want them to act rashly, but what should we do?
When you're at least 10 years out from retirement, you have to always take a long view of this. My advice is always to work with a trusted financial planner, somebody who's skilled at managing these sorts of fluctuations. This volatility comes with the turf. If you're going to invest in the stock market, you're going to have ups and downs. So take a long view, take a deep breath, keep investing, and remember, when the market's down, the prices of stocks are cheaper, so you can buy more with the same dollar.
Okay, so there we go. And what does it mean for people on the cusp of retirement? Maybe they're not in that, even 10, 20, 30-year range, but in the next couple years even.
Yeah, if I'm sitting here thinking about whether or not to retire in the next few months or even this year, I'm probably going to think hard about staying at work for a little while for two reasons. First and foremost, the job market is really great right now, still cooking along really fast. People who want jobs can find them. People are getting pay raises. It's a good time to be working if you can afford to delay that retirement a little bit. At the same time, the wealth that you would have if you retired right now would necessarily be lower than if you could wait even just a few months and hopefully let that market return a little bit to the long-term trend.
All right, so two major perks right there for those, again, in the next couple months or this year that you're going to need to pay attention to. And also, what does this mean for current retirees? What's your message for those who are already living off that retired or, savings there?
That's where it gets really tough because you're managing what might be a fixed income stream with 9% inflation and a retirement portfolio that might have taken a pretty big hit in the most recent months. My advice there, first and foremost, always work with that financial planner and don't make a rash decision. But second of all, take a really deep breath and realize that the long-run trend is positive in these wealth portfolios. And so if you can just make your money work as well as you can for these next few weeks and months, you might look up in a few more months and things will be back to normal.
All right, and it goes back to some of that advice you gave us last week in terms of budgeting and making some cuts maybe if you have to, but take a deep breath overall. Don, thank you so much for coming back in for Money Talks. And guys, we are going to keep you posted with this. We're going to share this interview online and on our Facebook pages, of course, and we're going to be right back after this break with a final look at our forecast.